Mark, thank you very much for joining us. How are things in Thailand?
Everything is fine, thank you, except the economy is not doing particularly well.
Mark, before we start talking about the economy, I want to ask you about Thailand. I have not had the pleasure of visiting, but I hear it's absolutely gorgeous. And what is it you love most about Thailand?
Well, if you are in Asia, there are many choices where you can live. You can live in the major cities, Singapore, Hong Kong, Taipei, Tokyo, Beijing, Shanghai, and Bangkok, and so forth. These are the major cities. And then there are secondary cities in Malaysia, say Penang, and in Indonesia, Bandung and Surabaya, and so forth. Shanghai is the second largest city in Thailand. The large city is Bangkok. Shanghai has maybe 1.5 million people, but they're spread out over a large distance. So it's kind of perceived as a sleeping city. And it's laid back. People are slow. I know that because I have employees, but they're nice people. They're not stressed and so forth. And my wife is Thai, so we didn't have any problems to buy real estate because she's Thai. You need to be a Thai national to buy a real estate. There are dangers to buy a real estate in the name of your wife, because if she goes off with someone else, you lost her and the real estate. But in my case, it's this risk is bearable, and we have a living house where we live. It's an old Thai house which has been redecorated, and I have an office building. The office building is in the land, is in the name of my wife, but it's been leased out to me for a period of 30 years. And now I renewed the lease for another 30 years. So I'm relatively safe that I can stay until my passing away.
So she can't kick you out.
Well, in Thailand, the law is the law, but it would be difficult to enforce the law. But anyway, that is everything has advantages and disadvantages. But in general, of all the cities in Asia that I know, and I've traveled everywhere, and some of my friends, they pass through Shanghai repeatedly because they say it's a nice city, it's a nice atmosphere. Some stay in luxury hotels, some stay in kind of small guest houses, but they like the atmosphere.
And now I'm curious, you've lived in Thailand for many years, and prior to that, you were living in Hong Kong for many years.
Correct, yes.
Why did you leave Europe for Asia?
Well, this is a good question. I went to school in Switzerland, and I had, to some extent, a privileged position because I was a member of the ski team. And my father was a very famous orthopedic surgeon. But I always wanted to go somewhere where I wouldn't know anyone and build up my business myself without having to say thank you to any relative or whatever it is. So I went to Hong Kong, and at the time I really didn't know anyone. But then I built up my network of clients throughout Asia. And that's how it went. And I went to Hong Kong with the intention to stay forever in Asia in my life, never to go back to Europe.
Fascinating story. So let's move on now, and I want to discuss the economy, and more specifically the US economy, given its the largest economy in the world with a GDP of 25 trillion. It appears to be doing very well, growing at 3 to 4% annually. The jobless rate has been below 4% now for 25 consecutive quarters. And the last time we saw that was in 1969. So it appears to be doing relatively well. What's your take on the US economy?
Well, I mean, when we discuss an economy, we have to be sure that we talk about the same thing. You know, GDP, in other words, gross national product, is not reflecting, say, the reality of the well-being of people. So you could have a GDP that goes up, but the standards of people goes down. And why does it occur? Because the economy expands, prices go up, and prices go up more than wages. I'm not saying for everyone, not for Bezos and Musk and all Zuckerberg, but for the typical Canadian, for the typical American. In the last few years, the government has not only printed money, but had huge deficits. These deficits, they are financed essentially by money printing. And so we have cost of living increases that exceed the wage gains. And so the standards of living of most people is going down. This is my view about the economy. Now, the government can publish statistics and say everything is wonderful. Well, what do you expect? The government will not tell people, oh, I'm sorry, your standards of living are going down. So this is my view about the economy. And this has always been the case. When you have money printing, some sectors of the economy and some stocks do well and others don't. So it's very uneven. And this is the problem of inflation. People talk about inflation when the cost of living go up. They don't talk about inflation when the stock market goes up. But it's the same thing, basically. The stock market and, say, the property market in Toronto, as you know, has become unaffordable for young people. Young people can't rent a flat or buy a flat in the center of Toronto anymore. So we have to be very careful in saying, oh, GDP is expanding and so forth and so on. We have to look at, say, a household. How much do they pay on rents? How much do they pay for health insurance? How much do they pay for food? And that has gone up a lot.
No, you raised some very good points there. And as you know, I'm living in Toronto, so I see it firsthand. And you made a good point about GDP per capita. I believe the GDP per capita in Canada peaked out in 2020. So we're talking 4 years ago now, and it's been declining ever since. And of course, the government's going to not talk about that. And I also want to bring up a point you made about inflation, because it is running rampant. And I know the governments in both the US and Canada will tell you, oh, no, it was at 9%, but we got it down to 3%. I don't believe that for 1 second. I think it's still significantly higher than what they're telling us.
That for sure. I mean, it's interesting. We have in the US an outstanding statistician, John Williams, and he compiles the rate of inflation according to how it was compiled in the 70s, before they changed the weighting of the CPI. Now, he has an inflation rate that is far higher than what the government is publishing. So I was always a little bit, I mean, I know that the inflation or the cost of living increases are higher than what the government is telling us. But I had some apprehension about the statistics that John Williams produced. But recently, Larry Summers, he was a Treasury Secretary. He produced statistics that showed that in the US, the rate of inflation today is still higher than the level of interest rates. So when you have negative real interest rates, in other words, the cost of living is going up by, say, 7%, and the 10 years treasury in the US is above 4%, it's still negative. That by itself is inflationary. And Summers is very unusual that the former Secretary of the Treasury would criticize the Fed, because normally they don't do that. They all protect each other. But that's what he did. And he had his inflation rate at close to 18% last year.
I can believe that totally. And I recently read an article about the money supply in the US. It's doubled in the last 4 years, which basically says your purchasing power has been cut in half. So that a house that would have cost me $1 million before the pandemic is now going to cost me $2 million.
Correct. It's come off a little bit in the last 2 or 3 months in Toronto, but it's still up significantly. And also, I'd like to point out one issue that, in my view, is very important. Recently, we had a breakout on the upside of the price of gold and silver. Now, what does it tell you? Gold is the only true money. You cannot vary the supply meaningfully. With money printing, you can create a lot of money in 1 year and then less in another year. Gold is relatively steady. So when gold goes up substantially, the gold market is telling you that the purchasing power of money is going down massively, not a little. And this is the fraud that governments do. Every government has, in the end cycle of its being, every government has printed money, because especially in democracies, to increase taxation is very difficult. Especially if taxes are already as high as they are, and if the government is as of low quality as it is. You know, I think you could maybe move someone to pay more tax if the government would perform better. But the government, especially in Canada, is a disaster.
Oh, yeah, I see it firsthand. And you raise a good point about debt levels, because this is one of the things that Biden has done here in recent years. He's, I believe the federal debt level is at 35 trillion now, give or take, and it's going up by $1 trillion every 100 days.
Yes.
Which is just, it's astounding when you think about those numbers.
Yes, and this is the problem, that you see, as long as interest rates went down and the central banks actually kept them low or at artificially low level for too long. But now the price is that interest rates have shot up. So the interest payments on the debts are going up substantially. And in the US, we are at interest payments per annum already at over $1 trillion. But it's going to go up to something like 1.6 trillion by year end, regardless. And there's no hope that Trump or Biden would cut the deficit. They're both interventionists, and they both would like to print money. So the outlook is for inflation, in my view, is actually that it will accelerate over time.
And so, and this is another interesting feature about both Canada and the US, is that our governments in the US, every 4 years, they get reelected. In Canada, it's 4 to 5 years. but all they're trying to do is get back into office, right? So they're going to spend, spend, spend. In the case of Biden, he's spending trillions of dollars to keep this economy going. I think I read something recently where for every $1 trillion he's getting in GDP, he's actually spending $2 trillion.
Yeah, sure. They're spending much more money than GDP is growing. It's not sustainable. That we can all agree. But you understand, the big question is, at what stage does the system break down? And what do you do when the system breaks down? Now, in Turkey, if you go to Istanbul, you have a rate of inflation of, say, around 100%, and you walk around the streets, and it looks quite normal. You go to Argentina, the same. It's just that the money loses its power to buy things every day. And so in the US, we peaked out in terms of inflation in 1980-81, when inflation went to around 18%, and interest rates also. And after that, interest rates and inflation slowed down. In my view, it's quite likely that we will have interest rates and inflation in future that is way above the level we had it in 1980. In other words, the system can survive even if inflation is 30%, 40% per annum, but not forever. And one thing we have to realize, and it's difficult to explain in 3 minutes, but basically, once you embark on quantitative easing, once you embark on printing money, it is next to impossible to stop it, because the system is used to it. And if you stop it suddenly, the system breaks down. So the easiest to do is just to continue along the same way.
Yes.
And to provide the public with the illusion that the economy is growing, when in fact the standards of living are going down, and the lower classes of society, don't mean this in a negative way, but the lower income recipients, they spend maybe 80% of their income on food and housing. They are hurt very badly from the rate of inflation. Whereas I spend maybe 1 or 2% of my income on food. So the food price increases don't touch me. But for poor people, it does touch them, especially if they have children.
Yes. And so just to summarize what you just said about debt levels and also inflation, if you want to pay down your debt, the only way you can do that is by cutting spending. And of course, in Canada and the US, they're not going to do that because they're always trying to get elected in 3 or 4 years, right, down the road. Or they can increase taxes, but you're not going to do that because you're going to cause a revolt, or print money. And in the case of Canada and the US, they just keep printing money.
Correct. The increase in taxation is unpopular among everybody, and it's futile because the increase in taxation in every society will touch the poor people more than the rich, because the rich, they have always a way to evade taxation with accountants and lawyers and God knows what. But the poor people, they pay the tax. And so every tax increase really hits the poor people. But the money printing is used because it is the least painful on first sight. You understand? People, they get a salary increase of 10%. They don't know how to precisely compile their cost of living increases. The cost of living increases are, say, 12%. So net, they lost 2%. But if you go to your worker or the office staff that you have, you tell them, look, business is bad. We need to cut your salary by 5%. you have a revolution. You have a revolution. So the governments and entrepreneurs, they prefer the inflation way. And I'm very, very concerned that the purchasing power of money will diminish meaningfully. So how do you protect yourself? In inflationary times, in nominal terms, stocks tend to go up because the currency then goes down. Now today we could say, well, against what will the Canadian dollar go down, or against what will the US dollar go down? Because the other currencies are not much better. To this I say, yes, that's correct. All the currencies are bad because they all print money. But the currency where you can't print money, the true currency is gold. And someone could argue that it's Bitcoins and other cryptocurrencies. I have some reservations about cryptos and Bitcoins, but I firmly believe that every citizen that is concerned about his country and his own well-being should own some gold and silver. Physical. Now, you want to make a lot of money in a bull market of gold. The gold shares and silver shares go up more than the physical, but not always. And there's a higher risk.
So let's talk about gold. And once again, you were stressing the importance of being invested in physical gold as opposed to the miners. And the miners are really underperforming. If you look at Newmont, it's still down on the year, I believe somewhere around 5 to 10%. And that's in spite of gold being at $2,300 or up over 10% on the year. And I'm sure a large part of that has to do with their margins being squeezed due to the high cost of oil, the high cost of labor. So you make a very good point about investing in the physical.
Yes, I mean, it's remarkable. I follow stock market since 1970 closely, because that's when I started to work on Wall Street. And of course, I followed the gold market since the 60s and 70s. I saw the gold mania and silver mania in 1978, 1980, and then the collapse in prices, and then the renewal of the uptrend after 1999. But the point that I want to make is gold shares at the present time are incredibly low compared to the physical price of gold and silver. That's what you just pointed out with the example of Newmont mining, which I agree with you 100%. There are other stocks that are even more depressed than Newmont. But gold, the gold shares are also incredibly depressed against all the other stocks in the market. In other words, if you take gold share sector relative to the S&P, it's all gone down until just recently. Number two, in Canada, it may be a little bit better, but in the US, we can measure how much gold shares do portfolio managers own. It's among 66% or 70% is less than 3% of the portfolio. So people are grossly underweight gold, okay? But at the same time, despite this underweight position, they have zero interest to increase the gold position. Zero. Tells you something about the IQ level of fund managers.
But why do you think that is? Let's just say in the last cycle, gold peaked in 2011. So here we are in 2024, and you're saying like there's just no interest in the sector whatsoever. Why is that? Even when we have this double-digit inflation, when we have global uncertainty, why is there so little interest in gold and gold equities?
This is a good question, and that we need to consider carefully. The millennials, they are born into a time when inflation didn't exist or was coming down, and they were born in a period of artificially low interest rates. Now, things have changed, but the young people, the Generation Z and the millennials, they're more interested in cryptos than in gold because they consider gold as a non-event. It doesn't move enough. Whereas the cryptos, you can get rich quick. This is a feature of every bubble, the get rich quick schemes. And I mean, I'm not saying that Bitcoins can't go to 200,000 or $1 million an ounce. It's like the tulip made in Holland. The sky is the limit. But I have some reservations about Bitcoins and cryptos, whereas I think that gold is relatively safe if you keep it in a safe place. I wouldn't call necessarily Canada under the government of Mr. Trudeau to be a safe place to hold gold.
So let's move on now. I want to get your thoughts on the equity markets. The S&P was up over 20% in 2023, and here we are. We're into the Q2 of 2024. It's already up 10%. What are your thoughts on the S&P here, and do you think it's overdone?
Well, I think that the market is reflecting the view among investors that the Fed will not do anything about inflation or will do very little, so that inflation will continue to accelerate in the long run. And in this environment, you don't want to own bonds. You're better off in equities. Now, there are some question marks about this reasoning, but this is what the typical fund manager thinks. And in this environment, I think we have to be careful which sectors we buy, because in the US and also in other countries, the high-tech sector is now very expensive. They call them the Magnificent 10 or the Magnificent 7. These are stocks that are very popular, but also very expensive. In my view, there are markets around the world that are inexpensive. Inexpensive, as an example, is Hong Kong, China. That is very cheap. Hong Kong property companies, and you have a lot of Hong Kong Chinese in Canada, they've never been so cheap in terms of valuations. You have a lot of property companies that sell at a 70-80% discount to net asset value. Now, I do not argue that the net asset value will decline, not decline. It will decline, but maybe not by 80%. You understand? So you're buying something that is very depressed. And the media that for years and years told you that Hong Kong was great and China was great. Now you cannot find a report by the media that would express any sentiment of optimism about Hong Kong or China. Everything is negative. So for that reason, I think that stocks in Hong Kong are cheap.
Okay, and I do want to ask you more about China and Hong Kong, but before we do that, I want to ask one more question about the U.S. You did allude to the fact that the S&P is very expensive. Do you think the S&P and the Nasdaq are in a bubble territory, and we could see
the Nasdaq, but not every stock on the New York Stock Exchange? As I said, the Magnificent 7 or Magnificent 10, they are expensive, but you have lots of stocks that are not expensive. So I would avoid essentially the Magnificent 7, and I would invest in markets that have underperformed the US for the last 5-10 years. Europe, emerging markets, gold shares.
Oh, you didn't mention Canada.
Yeah, well, we need a change in government.
Yes, I can't argue that point. So let's go talk about China now. It's the second largest economy in the world. GDP's around 20 trillion. And as you alluded to, everything we read about China lately is negative, especially when it comes to the real estate market, both residential and also the commercial. What is your take on China? And do you think it's as bad as we're led to believe?
The property market is bad, but the economy in China is not just the property market. And whereas Mr. Biden in the last 4 or 5 years was handing out money to people so they could go and spend it at Walmart and McDonald's and at Dollar General on goods which are mostly manufactured in China. The Chinese invested an enormous amount in infrastructure. And some is not productive, but most is productive. People don't realize that China has an incredible infrastructure for the production and the shipment of goods.
So you're bullish on China?
Look, it's difficult to be bullish amidst my view, but I think that whereas a few years ago people were overly optimistic about China, now they're overly pessimistic. And the media, and we know who controls the media, they are horrible at depicting China as a villain and as a collapsing system, which isn't the fact.
So I want to get your view on one other thing, and that has to do with China and its relationship with Taiwan. And this is something else we've been reading a lot about in the last couple of years, and whether or not China will invade Taiwan. Do you have an opinion on that?
Yes, I have an opinion. In my view, neither China nor Taiwan have any interest in a war and in an invasion. But, as you know, in 2017, 2018, the US organized demonstrations in Hong Kong to destabilize China. It was financed and organized by American NGOs. And that is not tolerable for China, because the Chinese don't really intervene in America's affair domestically. They do with money, and the US does the same in China. It's crazy. But the result of that is, if the US and the typical American, the ordinary citizen, he has zero interest in a war in Gaza, zero interest in a war in Ukraine, zero interest in a war in Taiwan. He just wants to get his steak or his hamburger for lunch or dinner. But the State Department, they want war everywhere. And if they cross the line where they would station, say, American troops in Taiwan and build American missile bases in Taiwan, I think that may be crossing the line. And the US would make a huge mistake, because I can assure you, one thing is clear. For sure, Chinese missiles would land in the US.
So I want to clarify one more point about the US. You made mention of the fact that you don't think the S&P or certain sectors of the S&P are overvalued. The tech sector is, but other sectors are not. But you mentioned earlier that you think the inflation rate in the US could increase significantly up to, I believe you said 30 to 40%. That would cause a great.
Yes, but not tomorrow. Obviously, not tomorrow. It goes on. I mean, the inflation cycles last. The upswing in inflation lasts 25 to maybe 40 years, and the downswing also is 25 to 4 years. It's not going to happen overnight, but I'm telling you, in my view, the uptrend in inflation and interest rates is here.
And so what does that do to the price of gold? So we're currently trading around $2,300 an ounce.
The price of gold experienced a true breakout on the upside. There are false breaks out, but this one is a true breakout because it was met by skepticism among individual investors. Individual investors, they go to a party and tell their friends, oh, my gold has gone up a lot. When you dig, how much do they have? An ounce or two? Very few people have 20 to 30% of their assets in gold. Very few.
You're right. And I'm sure
it's not the best investment, but it is a safe investment. And I would tell your viewers and listeners that they're making a mistake if they don't own any physical gold at all. That's all I can say. I explained that gold is true money. I explained that people are underweight gold. I explained that in an environment where the purchasing power goes down of paper money, that gold is one way to hedge against the loss of purchasing power.
Yeah, and I think the other interesting point is the fact that central bankers have been very aggressive in buying gold, but retail investors have not been. And we see that in the ETFs. We're seeing a lot of outflows here in the last few years. So that could, maybe that leads to the fact that there's so little interest in gold that the real move has yet to come. What are your thoughts on that?
Yes, I mean, the buying signal was when a British treasurer, Gordon Brown, in 1999 sold his gold, or part of his gold, at less than $300 an ounce. That is the perfect buy signal because it shows how dumb the central bankers are. But I'm very sorry now. I will slowly have to move on because I also happen to have to work once in a while.
I totally understand that. And I want to ask you one more question about Thailand, Mark.
Yes.
I'll let you go. It's known for beautiful beaches, and I often hear people speak of Phuket, for example. But what's your favorite beach area in Thailand?
Different people have different views. Phuket has nice beaches, and but I don't know all the islands. Some people that I know, they go to the islands and they love it. I don't go to Thai beaches a lot because I have a house in Vietnam near Da Nang in Hoi An, and which is on the beach. And it's a nice beach. So whenever, and I'm not a beach person. I prefer to live in a, say here in the north of Thailand, in the so-called Golden Triangle, we have 4 seasons: spring, summer, fall, and winter. In winter, the temperature is very pleasant, but a little bit cold at night. Now is on the hot side because we're moving into the rainy season. As soon as it starts to rain, it will cool down the weather. But in the south of Thailand, it's always hot. It's either hot or bloody hot. So here, and it's humid. Here in the north, it's not humid.
Mark, as we wrap up, you are the editor and publisher of the Gloom, Boom, and Doom Report. If someone would like to subscribe to this, where can they go?
We have a website, gloomboomdoom.com, all in one word, gloomboomdoom.com. And then I can subscribe. But I'm not in the advertising business, but it's very kind of you to bring it up.
I will make sure I include that in the show notes below. Listen, Mark, I want to thank you very much for spending time with us today and sharing your insights. Thank you.